We're jumping straight into NP Materials today.
Okay.
Everyone is watching the price action, but the real story is their massive shift toward high-value U.S. magnet production and the heavy-hitting defense and tech supply deals backing them up.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Subscribe and hit the like button.
Yeah, please do.
Because today, we actually have a very specific mission for you. If you've been watching the markets lately, you know it is incredibly choppy out there.
Very choppy.
Right. And we want to help you cut through that short-term market volatility and understand the fundamental mechanics at play with NP Materials. We're going to unpack their government backing, their strategic moats, and
how they're positioning themselves in an era where, honestly, global supply chains are aggressively shifting.
Exactly.
When you have a sector rotation of this magnitude, the daily charts can look like absolute noise.
Just a mess.
Right? Just a mess. So our goal today is to filter that out for you. We need to look at the actual foundation NP Materials is building, step by step, and understand why institutional money is paying such close attention to their physical output and their strategic partnerships right now.
Let's start right with the fundamental momentum, because their Q4 2025 earnings trajectory is it's sending a very clear signal.
Yeah, it really is.
In the fourth quarter, NP Materials hit sales of $52.69 million.
Which is solid.
It is. That is a solid 10% year-over-year increase. And off of those sales, they pulled in a net income of $9.43 million.
Right.
Now, in a market where a lot of heavy industrial companies are struggling to show real top-line growth, a 10% bump in sales definitely stands out. But I want to look under the hood here.
Okay.
Is this just about selling more volume, or is there a structural shift in their revenue?
Oh, it's definitely a structural shift.
Yep.
And that's actually the most critical piece of the puzzle here. To really understand their balance sheet, you have to look beyond traditional sales.
Okay, where are we looking?
We need to talk at the government's role. Specifically, a massive $51 million non-revenue price protection agreement they secured from the U.S. Department of Defense.
Okay, that's a fascinating line item. A non-revenue price protection agreement.
Mm-hmm.
What does that actually mean for the company's day-to-day operations? Because on the surface, that just sounds like bureaucratic jargon.
It does. It does. Think of it like a government-sponsored insurance policy on their revenue stream.
An insurance policy.
Yeah. To understand why this exists, you have to look at the history of the rare earth market. For decades, overseas producers have essentially held a monopoly. And historically, whenever a Western company tried to open a rare earth mine, overseas competitors would flood the market.
Ah, they'd flood it to artificially crash the prices.
Exactly. They artificially crash the prices, bankrupt the Western mine, and then boom, raise prices back up again once the competition is dead.
So it's essentially a shield against predatory pricing.
That's a perfect way to put it. This $51 million agreement from the Pentagon acts as a financial backstop against that exact tactic. It tells NP Materials, hey, go ahead and build out your massive, expensive processing facilities here in the U.S.
Because they know they're covered.
Right. If the global market price artificially drops below a certain threshold to try and squeeze you out, the Department of Defense will step in and cover the difference.
Wow. That completely changes their risk profile.
Entirely.
It means they can take on these huge capital expenditures for refining facilities without having to go to the banks and, load up on toxic high-interest debt just to survive a temporary price war. They have the U.S. government actively shielding their balance sheet.
And that stability allows them to keep their free cash flow incredibly healthy. They can reinvest directly into their own operational growth rather than just servicing debt payments.
Which is huge in this rate environment.
Exactly. When the Department of Defense is acting as your financial wingman, you can focus on scaling your output instead of constantly looking over your shoulder at global spot prices.
And we are actually seeing that reinvestment show up directly in their operational milestones.
We are.
In this last quarter, NP Materials achieved record production of REO, that's rare earth oxides.
Yeah.
But the standout metric to me isn't just the raw volume.
It's the mix.
Right. They successfully doubled their output of NdPr oxide.
Neodymium praseodymium.
Try saying that 5 times fast. But really, why is doubling that specific compound the headline here? What makes NdPr so much more valuable than just the raw oxides.
To simplify this for you, think of the rare earth supply chain as a massive, highly technical ladder. At the very bottom, you have the raw dirt and the basic unrefined oxide.
It's cheap stuff.
Right. It's a volume game with lower margins. Anybody with a hole in the ground can play at the bottom of the ladder, but as you climb up, you have to separate out these elements. Rare earth elements are chemically very similar, so separating them requires immense chemical engineering.
It's not just digging, it's high-level chemistry.
Exactly. When you finally refine the material into specialized compounds like NdPr, you enter the premium, high-margin market.
Because NdPr is what you absolutely need to make the strongest permanent magnets in the world, right? You can't build an electric vehicle motor without it.
Yes, and it goes far beyond electric vehicles. Without NdPr, you don't have the high-performance magnets required for wind turbines, advanced robotics.
Defense tech.
Exactly. Critical military tech like fighter jets and missile guidance systems. By doubling their output of this specific material, MP Materials is proving they can execute that complex chemistry at scale.
And this ties directly back to their financials. I noticed their EBITDA beat expectations.
That did.
And if I'm understanding you correctly, that beat isn't just because they mined more dirt. It's because they're capturing significantly more margin per ton by moving up that supply chain ladder.
That's the core of the bull thesis. They are successfully shifting their entire business model toward premium products right at the moment when global demand and rare earth prices are rising.
Okay, so we have the financials and the operations. Let's talk about their competitive moat, because MP Materials has two distinct moats that are incredibly difficult to replicate.
Oh, absolutely.
First is the physical moat. They have exclusive ownership of Mountain Pass in California. For those who aren't deep into the mining sector, Mountain Pass is the absolute only scaled rare earth mine and processing facility in all of North America. Period.
And we really shouldn't underestimate how hard it is to establish a physical asset like that. You can't just find a deposit and start digging.
No, not at all.
It takes years, sometimes decades, and billions of dollars to clear environmental impact reports, secure permits, and build out the sheer infrastructure required, especially in a heavily regulated state like California.
Right.
That physical moat alone gives them a multi-year head start on anyone else.
But the physical moat is only half the story. The strategic moat is arguably even stronger, and it comes back to the government. Because of the Defense Production Act, the U.S. government is actively prioritizing domestic supply chains for critical minerals.
Huge tailwind.
Right, but wait, for those who aren't policy wonks, what exactly does invoking the Defense Production Act mean for a private company's day-to-day operations?
It essentially moves them to the absolute front of the line. The government has decided that relying on foreign supply chains for critical defense materials is a national security threat. So under the Defense Production Act, MP Materials gets prioritized government contracts.
Streamlined grant approvals, too, I imagine.
Yes, and direct access to federal capital. They are practically woven into the national security apparatus at this point.
It creates a barrier to entry that is incredibly steep. A new competitor isn't just trying to build a better mine. They are trying to unseat a supplier that the Pentagon has already entrenched into its strategy.
And it isn't just the government validating them. Look at the commercial side. Apple recently signed a $500 million supply deal with MP Materials. $500 million.
That is a staggering amount of capital from a single tech company. Yeah. And Apple has arguably the most rigorous, demanding, and scrutinized supply chain standards on the planet. They audit everything down to the microscopic level. What does a commitment like that signal to the broader market?
It signals absolute trust in MP's ability to execute consistently. Apple does not write $500 million checks based on a cool PowerPoint presentation or, future potential.
No, they want results yesterday.
Exactly. They require guaranteed scalable output. For MP Materials, this deal acts as a massive halo effect. It de-risks the company for other commercial partners. If their refined materials are good enough, pure enough, and reliable enough for Apple's global ecosystem, it proves to the rest of the tech and automotive sectors that MP Materials can deliver at the absolute highest standards. Looking at the flip side, we have to be realistic about the risks and the current market reality you are facing as an investor right now. The journey to domestic supply chain dominance isn't a straight line up.
I'm glad we're pivoting to the bear case because we need to ground ourselves in the reality of the chart.
We do.
The recent price action has been undeniably choppy. If you look at the short-term metrics, sure, there are some bumps. We saw a 2.28% return over a one-day period and a 2.46% return over a 7-day period.
Which looks fine.
Right, but if you zoom out just a little bit to the 30-day window, you are looking at a 10.09% decline. Let me play devil's advocate here. A 10% drop in a single month is a lot of blood. That is going to shake a lot of retail investors out. Why hold through that kind of volatility?
It's a fair question, and you can't just brush off a 10% monthly drop, but you have to synthesize what these numbers are actually telling you about the broader sector. That pullback signals high volatility, yes, but a lot of that volatility is tied directly to the drama that naturally surrounds the rare earth market.
The geopolitics of it all.
Exactly, combined with the standard turbulence around earnings seasons. When you have a sector so heavily influenced by geopolitical tensions, tariff threats, and shifting overseas export policies, you are always going to see these aggressive short-term swings.
So you're saying the market is reacting to macro headlines rather than a fundamental breakdown in MP's operations?
To a large extent, yes, and this is why you have to look at the longer-term momentum to get the real story. Despite that recent 10% haircut, the 2026 year-to-date gains are sitting at a very healthy 14.6%. Wow.
Okay.
Now, that is down from the peak of 16.3% we saw back in January, but it is still fundamentally resilient.
That makes sense. And when you look at the one-year total shareholder return, the magnitude is undeniably strong. What this implies to you, the listener, is that despite the day-to-day or even month-to-month chop, heavy institutional money is still steadily flowing into these defense-critical plays.
Because they see the big picture.
The smart money understands that building a domestic supply chain from scratch involves growing pains. They seem willing to ride out the 10% pullbacks because the multi-year thesis remains completely intact.
But part of that thesis involves actively monitoring the competition. NP Materials isn't operating in a total vacuum, and we shouldn't pretend they are the only ones trying to solve this problem.
Right. Let's bring up their main market competitor, USA Rare Earth. They are definitely in the race, and they are making their own moves to establish a domestic presence. What are the actual hurdles they face trying to catch up to MP?
We have to analyze this objectively. USA Rare Earth is absolutely a player to watch, and they have some fantastic assets, including their Round Top deposit in Texas.
Right, I've seen that.
However, going from a deposit in the ground to a functioning, permitted, chemically complex refining facility is a monumental task.
Yeah.
If we evaluate the landscape as it stands today, NP Materials holds a very significant near-term edge.
Where specifically is that edge? Is it just the head start in time?
It's time, it's technology, and it's capital. NP Materials is far ahead regarding the actual ramp-up of their U.S. magnet capacity. They have superior overall funding, deeply bolstered by those DoD agreements we discussed earlier, and most importantly, they have current proven profitability.
Which USA Rare Earth doesn't have yet.
Right. USA Rare Earth is fighting to secure the immense capital and perfect the complex separation chemistry needed just to reach the operational altitude that NP Materials is already cruising at.
Let's break that down even further, because looking ahead is how you actually make sense of where this narrative is going. We need to look at the upcoming 30-day to 1-year horizon. What is on the catalyst calendar for 2026 that the market is waiting for?
The most massive physical milestone on the horizon is the 2026 groundbreaking of their brand new $1.25 billion facility in North Lake, Texas. They are calling this the 10X Magnetics facility.
A $1.25 billion campus. That's not exactly a pilot program in someone's garage.
Not at all.
That is an all chips on the table level of capital expenditure. And this isn't just about digging more dirt. This facility is designed to take that refined NdPr we talked about earlier and turn it into the final high-value product, the actual finished permanent magnets.
And we have to connect this massive Texas facility to its primary end user to fully grasp its strategic value. This campus is absolutely critical for a massive upcoming production ramp-up with General Motors.
Oh, all right, GM.
Yes. General Motors is betting a huge portion of their electric vehicle future on securing reliable, domestic sources for their EV motors. NP Materials is building this facility specifically to feed that voracious automotive demand.
That is the ultimate definition of securing a supply chain. They are locking in the entire value chain, all under one corporate umbrella, from the raw dirt at the mine in California to the separation and refining, all the way to the finished magnet rolling out of Texas, straight into a GM assembly line.
It's a closed-loop system entirely within the United States, and while we wait for that Texas groundbreaking, the market is going to be hyper-focused on the upcoming Q1 2026 earnings expectations.
Right, because of the Q4 beat.
Exactly. After the strength they showed in Q4 with the record production and the EBITDA beat, the expectation is high. The market needs them to prove that Q4 wasn't a one-off fluke, but rather the new baseline. They will be looking for a continued, steady ramp-up in both the raw rare earth oxides and the highly refined magnet materials.
If we zoom out for a second and look at the broader narrative, all of these individual data points, the DoD funding, the massive Apple deal, the $1.25 billion Texas facility, the GM partnership, they are all symptoms of a massive macro tailwind. We are witnessing a generational sector rotation into critical minerals.
It's a perfect storm of demand across multiple disruptive sectors. First, you have the electric vehicle revolution, which requires millions of highly efficient motors. But then you layer on the exploding demand from artificial intelligence.
I'm glad you brought up AI because people don't often connect software to mining.
They really don't.
But AI data centers require an incomprehensible amount of raw power and advanced cooling systems to keep those servers running. All of that hardware relies on high-efficiency motors powered by rare earth magnets.
Exactly. The cloud still requires physical infrastructure. And then you layer on top of EV and AI the defense sector's insatiable need for these materials. Advanced weaponry, autonomous drones, next-generation aerospace applications. None of it functions without these specific elements.
It's critical.
And driving all of this is an urgent, almost panicked push by the United States to secure its supply chains.
Because for decades, China has maintained a near monopoly on the refining and production of rare earth materials, right?
Yes. The U.S. government has finally woken up to the reality that relying on a geopolitical rival for the fundamental building blocks of both the future tech economy and national defense is an unacceptable strategic vulnerability.
It's just too risky.
Exactly. The global chessboard is shifting, and supply chains are being radically redrawn to prioritize security over cheap overseas labor.
Which brings us right back to why MP Materials is sitting in such a unique position. They aren't just a mining company. They're the physical manifestation of the U.S. strategy to counter that overseas dominance.
Well said.
Okay, let's wrap this up with the lowdown summary. Based on everything we've unpacked today, MP Materials is positioning itself as the undeniable U.S. rare earth leader. Yes, you are going to see price volatility. As we discussed, a 10% drop in a month is tough to stomach.
It is.
But within the broader context of a government-prioritized supply chain play, that volatility is widely being viewed by institutional investors as an opportunity rather than a red flag.
The institutional support, the irreplaceable physical moats, and the deep strategic partnerships with companies like Apple and GM create a remarkably solid floor under the company's long-term ambitions.
And just to illustrate the sentiment out there, let's look at the pure analyst price targets. Now, these are just projections, but they paint a clear picture of where the consensus is leaning right now. Overall, analysts see roughly a 10% upside from current levels.
Okay, what are the numbers?
If you look at the spread, the consensus is hovering right around that $75 to $80 mark. We have one average target sitting at $77.80. Looking at another data set, the median target is $79.50, alongside another calculated average of $74.64.
Pretty tight range there.
Very tight. And for the most aggressive, optimistic forecasts out there, we are seeing high targets stretching all the way up to $112. The sentiment clearly acknowledges the immense value of the closed-loop supply chain they are building.
It's a compelling set of data, and the market mechanics clearly favor domestic producers right now. But I want to leave you with a final thought to chew on as you watch this sector evolve. We've talked a lot about the companies, the financials, and the charts today, but think about the sheer physics of the situation.
Okay.
Advancing at an absolute breakneck speed. How will the physical bottleneck of manufacturing rare earth magnets ultimately dictate the pace of global technological supremacy over the next decade?
That is the trillion-dollar question. You can write all the advanced AI code in the world, and you can design the most sophisticated defense systems imaginable, but if you don't have the physical magnets to power the infrastructure, it all grinds to a halt.
Exactly.
The future is physical. Thank you so much for tuning into the Easy Money Show today. We love breaking down these massive market moves for you.
Keep your eyes on the data, watch how these supply chains develop, and as always, stay curious as you watch the markets.